News. Let's go to Lincoln Ellis. Lincoln, first to you on what happened with Netflix. Right now, initially there was a pause by investors, but right now it's trading up after hours.
Yeah, the numbers actually seem to be relatively in line to slightly better. That's probably off the back of a successful launch of the second season of House of Cards. But you saw not only growth in the domestic numbers, but more importantly, a growth in the international numbers. And I think that that's where the key growth is going to come from. Ads from overseas, other markets, and other types of revenue streams, as you guys were talking about at the end of last hour, ad sales and other types of income that they can add to that bottom line. So not only subscribers for the streaming service, but other types of service, bundling those things together for, to continue to capitalize on market share.
Yeah, let me just give you this. The total international streaming subscribers, 12.7 million. International is crucial. You know, obviously domestic, they own it, 35.7 million, but pretty interesting right now. And get this, Netflix opposes the merger between Comcast and Time Warner Cable. This is breaking right now. The headline is that Netflix, quote, opposes that merger between those two giants. Lincoln, that's fascinating to me. Why do you think that is? They probably feel that they'll get shut out, yet they just struck a deal with Comcast.
Yeah, I mean, it has to do a lot with some of the aggregate other types of streaming platforms that have been out there, Hulu in particular. And both of those companies will have tangential relationships with other types of platforms. And so when you aggregate the large cable companies to put up a fight or put up an opposition to or an alternative to Netflix, that's really what they're trying to head off at the pass here.
Let's go to our two market analysts. Pete, I want to go to you first. Pete Lang from Lang Capital. Netflix is in one of those very interesting moments of development where it could go one of two ways, depending on a lot of things, depending on regulations, depending on competitors, what Amazon does in order to compete with it. Would you wait for a while for the shakeout before you invest, or would you get in now?
I don't think so. Again, you've got to realize that I represent a conservative, high net worth individuals for the most part. So not really my client's cup of tea, so to speak. But having said that, these are strong earnings. I think it's a good buy signal for the right investor. Also, one point of emphasis, their total subscribers about 48 million. They're looking for 100 million. Those are really strong growth numbers.
And now they're going to come out, and this is another headline, guys, that they're going to have a $1 to $2 price increase for new members. So David Asman isn't going to get hit with that because he's already a member, right?
But that's actually, that's a lot lower than it used to be. Remember the problems that they had when they had that price increase about a year and a half ago. The stock dumped, went down like a lead balloon, but then came roaring back. So I think a $2, Liz, price increase is really not that much. That's probably a good indicator for the markets.
Well, let's bring Chris into the discussion. And whether it's Netflix or any of the other momentum plays, do you stay away from those yet still keep your hands in this market as far as equities are concerned?
Yeah, we certainly think the equity market's a great place to be. The tailwind hasn't come out of the fixed income where we would be more cautious, and we think that money ultimately comes in. But we try to avoid the high multiple stocks. We think growth stocks are being repriced in the last few weeks. We're now getting into the heart of earnings season, so it should give us some better direction. But the month of March was very difficult. There's been a rotation to value, and that plays really into our hand where we like value names. Stocks that were trading at 14 times sales, now at 10 times, that's not in the value world yet. So we're finding great opportunities. We see a lot of small cap names that we've been putting money to work, and we will be over the next few weeks.
Well, let me just talk, Chris, about one of your stock picks because it did extremely well today. Super Micro Computers. Companies are refreshing their computer systems right now, partly to get in on the cloud business, et cetera. Does Super Micro play into this? It was up over 6% today.
Supermicro is a well-run company, great management team, significant ownership in the company, and Intel is ramping out some new products in the fall, which we haven't seen delays in. So we think that the opportunity going into the end of the summer and in the second half is going to be great for companies that are tied into enterprise spend. And Supermicro is benefiting, we think, from IBM's sale to Lenovo that's been tied up. So customers have been cautious in what they're purchasing, and we think Supermicro has been a beneficiary of that.
Peter, you're throwing caution to the wind and putting a lot of eggs into the energy basket, certainly with Halliburton, which is up about 3% today, came in with better than expected numbers. Dominion Resources, why the big play here when it comes to energy?
Well, if you think about it, natural gas is going to be dominated by the United States, and that industry is going to be redefined and built. And who better not to invest in but the companies that are building that infrastructure? So 3 really strong companies, great earnings, great capital appreciation potential. My safe money bets are there.
Well, Lincoln, we're very happy about the earnings that have come out, as investors are, with regard to Netflix. But I have to ask about a tendency that we've been seeing, which are these lower highs. I mean, today was an up day, and we had good numbers reporting after hours. But lower highs and lower lows, that does tend to be a syndrome that we're spilling into right now, right?
Yeah, that's right, David. I think the course of the conversation with Chris and your other guests is really spot on. The air has been coming out of these momentum names, really, first in the biotech space, then in the high multiple space. And a lot of that has to do with what you and I and Dick Fisher talked about a couple of weeks ago with the actual leverage that's embedded in the system. And when that starts to happen, it happens in a cascading fashion. And the other piece of the puzzle is when you continue to make lower highs and lower lows, the commodity trading advisor or other kind of high-frequency traders will come into these markets and push these markets a little bit lower. So again, going back to these broader-based thematics like energy, like the other guest was talking about, where there is value, there is a long-term thematic play that investors understand, are willing to put money into, and are willing to ride out through the course of an investment cycle. That's a more interesting idea than finding even our favorite today, Netflix, at 185 times earnings, or our friends over at Amazon, which I don't think they've had earnings for a couple of years.
By the way,
so,
I call the president of Dallas Fed Richard Fisher. You call him Dick Fisher. I didn't know you were on such a close basis with this guy.
It's we have the similar hair thing happening. That's where it starts.
I see. Good stuff, guys. Hey, Pete Lang, Chris Retzler, thank you very much. Lincoln, we're going to come back to you when the S&P futures close shortly. Appreciate it.